The S&P 500, the Nasdaq 100. Today's video is going to be pretty short, sweet, to the point, right? We didn't have much happening. What I do want to highlight to you is a few of the structures that are forming and how I am reacting to those. And I know a lot of you guys are going to have the same kind of questions, so let's attack those first. Number one, you go to the 1 hour, you can clearly see the S&P 500 SPY showing a head and shoulders. I see it. I agree with it. It looks logical. Looks like it wants to play out. We kind of mentioned it yesterday. If you break down, you actually start getting that. You push target 1, 432, then around 429 is target number 2. But what I want to say here, though, is some of the stuff that's happening here, while we're pushing down and things that were said today, because we're going to go over the charts heavily, but there were some big question marks today. Now, a few things, you had a blackout period basically last week and the week before that, I think, where no Fed member said anything. Now this week they're not stopping. It's literally nonstop. So a few things that were said. Powell did say it's likely they have to raise again, right? He said very likely. But then we had other Fed members come out and speak, and it seems like they're less hawkish than Powell. Pressing ahead now with additional rate hikes could needlessly drain momentum from the economy. Okay, Bostic. We had that comment, right? If the economy does not slow down, we will have to reconsider positions on rates. And again, I'm like, Bostic, you're going around in circles. He's literally going around. I'm telling you right now, the Fed, I believe, are confusing the market more than anything or anyone. Okay, this was essentially what Bostic said summarized. The Fed should do all it can to avoid a significant economic downturn. If the economy does not slow down, we will have to reconsider position on rates. And I'm assuming he's regarding what's happening with jobs, employment, and spending, and not necessarily the economy as a whole, right? Because his economic downturn, I'm like, bro, what are you talking about, right? Expecting inflation to come back into target in a measured way over an extended period of time. And he went on to further say it's going to take a little bit longer than he assumed. And I think his target was the end of this year, which I think we all can agree, 2% inflation goal by the end of the year was crazy, just based on how it's actually moving on every report, was out of the question. So it's like, I guess, thank you for coming back to reality. That was the biggest things that were said. And then Bostic also said rates should stay where they are for the rest of the year. That was his biggest comment that he said on the day. And you're seeing this kind of come out from a lot more than just Bostic. He's also from multiple Fed members as well. Not today, but over the past few weeks, you've seen that. So when we start to dive into what's happening and expectations on rate hikes, again, I'm going to tell you right now, if inflation data comes out similar, and core inflation is slowly dropping, and the regular inflation, non-core, is, just baseline still dropping as well, I don't believe they're going to raise rates. Okay. But the expectation right now is that you're going to see a little bit of a spike in CPI or some of those data pools based on where we're at and how we're moving, and based on the strength of consumers specifically. We had Canadian, I think, consumer spending came out today. It was a pretty nice beat on that. So it just gives us a little bit of the sentiment of what to expect coming into, U.S. consumer spending, et cetera. So those are big things we have to be paying attention to. So again, when we look at the SPY, with the possibility of some of the stuff that's being said, it makes sense to get a little bit of a pull down. It makes sense. That being said, I did start doing a little bit of buying today on a few equities and their dated positions, and we're going to go heavily into that today. But before we do that, to ask you to consider doing two things: liking and subscribing. It helps out tremendously. And again, if you get nothing out of this, don't subscribe, don't like the video. I don't mind. But genuinely, if you want to support the channel, it's the best way to do it. Also, too, just so you know, if you're not in the newsletter, you're not on Twitter or anything like that, then I recommend probably not joining Discord. I think Discord is that next step for people. If you're trying to get really serious with trading, understand how we trade, why we trade, Discord is going to be for you. But if you're looking for signals every single day and how to trade, how to get in and out, Discord's probably not for you. Yesterday, minimal trades. Didn't really touch anything, right? It wasn't a market for us. It wasn't what we were looking for. So again, if you're trying to get someone to hold your hand and tell you exactly what to trade, I'm never going to be that guy. But if you want to learn, understand why you look for trades, how we trade, Discord, again, will be for you. But again, it's up to you. The links are down below, but let's get back into it. So again, the biggest conversation here was SPY, and I posted this on Twitter as well for everyone. So again, if you're not following on Twitter, I recommend doing so just so you can see all the charts that are kind of playing out, what to expect, head and shoulders, targets, etc. You know, another big thing we mentioned over the last video and the weekend was how Bitcoin is forming. A little bit of a bull flag here on higher time frames as well, the daily. You know, we go into Bitcoin, you see what's happening there. I'm going to Bitcoin a little bit on the video, but again, as I look at what's happening on SPY, ES, Dow, Nasdaq, there was one major deterrence from believing the short side here. And we could still drop tomorrow. 100% we could still start dropping tomorrow. I'm not saying that we can't. So do not say Tyler said we can't drop. It's not what I'm saying. But when we look at something, it's going to be eye-opening for you. And again, some people we choose not to talk about it. It's okay. I mean, I have to just because it's, every single day I'm going to make the video for you so you are prepared. We look at something like the daily time frame here. Your volume, again, strikes me as concerning. Significantly lower, guys, significantly. Raising volume as we're rising up, right? As we're breaking out, increased volume. Very low volume today. You go and you look at SPY's volume. Again, pathetic. 51 million. After hours, maybe gets to 55, maybe 54. But just nothing. That's the concerning part here. Is that you're not getting volume on this downside push. You're not getting follow through. So for me, it has me to the point of not really believing what's happening. Again, and that's just my perspective and opinion. Does that mean that I'm going and buying weekly contracts on SPY and, equities like Microsoft and Apple? No, I'm not buying weekly call options. No, I'm looking more for September through December in the money positions or at the money. So for instance, if I'm looking to buy, AMD and it's at 115, then if I'm buying at the money, I'm buying a strike of 115 targeting for December. It's basically like I'm trading stock just leveraged up instead. And I can control my risk based on if we start to break down on the ES and the Nasdaq. Right now, I believe you're just getting the opportunity you're looking for, again, like we've been talking about so much over the past few weeks. And again, I can only share my perspective on this, and I want to make sure I'm really clear on this. I'm not telling anyone to go crazy. And in Discord today, I said something really, really relaxed for myself. You want to be patient here. You don't want to be hammering. You don't want to be, there's fully sizing in. You want to be waiting to see what happens because you're at such a big inflection point on specifically something like the ES, right? So if I mark up the ES, I'm just going to drag this up here so you can see around 4,000 flat. This is going to be a significant level, right? It was your, you had your previous high right about here. You can see we also had what was happening right here as we zoom in really quick, right above this yellow line. You can see this was a swing level, right? We had support, then resistance, mounted, support, came back, resistance. You can see where this is, 4,400. Very, very easy, very clear. There's no question about it. We can even go all the way back to 2021, and this was a pretty big resistance as well, right? And then you mounted and broke back into all-time highs. So again, we're at a pretty big level, and you went straight through this last time. So again, as we look at this, I come into it with the perspective of, again, patience, patience, patience. Let's let this play out. Let's see what happens before we start fully getting into a position. But I want to start getting my feet wet in this as well. So right now, like max risk on any trade that I'm getting into, like from initial entries is around 12% based on where we're at on some of these plays. So I want to say that really clear. I'm not, if I go into, a monthly contract, let's say July 21st, and we drop, 3% on ES or 3% on Nasdaq, I'm going to get killed in those positions, most likely. So again, I'm just preparing myself for where we're at because I see us on a major support. I see buyers trying to hold us up. I see declining volume as well at this level. It just gives myself a decent opportunity. Now, when we look a little bit deeper at some other things, there were some other areas that, again, I liked. So we look at something like, IWM. IWM almost had an incredible day. I will say, and when I say almost, it's solely because of where you kind of had a little bit of a dip near the end of the day here. So we can see we hit the 200 SMA on the weekly, your 200 moving average on the weekly, 1, 2. you're bouncing back up. And you can see, obviously, you're fighting. You're still kind of trending. You're trying to hold above this. You can see the trend line as well, kind of just slowly eking you down. So again, you haven't got the breakout, but it's really good that you're holding on these supports as well. What does IWM, the Russell, signify for us? It's a risk on, risk off. That's how I view it, right? These are some of the riskiest names in the market, smaller caps. If they're getting love, you typically like what you're seeing, and you look for a risk on mentality. Okay, we look at something else like Dow. Dow on the day. Again, we've on the decline here. I mean, I think Dow's probably one of the more impressive names. You go to something like the daily chart. If we look here, again, I mean, it's hard to not be excited about this. We look at the Dow, again, clear ascending triangle. You can really bring this up to around, let's say, just top of resistance here. Really, it should be like a little block, but you can still see clearly making higher lows, pushing up as well. Similar to when Nasdaq dipped before, you're seeing names like ES, Dow, IWM dipping a lot less. For instance, you look at on the day of how much you're down here on something like NQ. Bring it up real quick. You can see right here, 1.3% down on the day. ES was only down 0.46%. So almost 3 times the amount you were down on NQ. So for every dollar ES dropped, the Nasdaq dropped $3. Take that into account of what's happening. In my opinion, it's looking like you're just getting profit taking off the top as well as what's happening. So again, I'm not saying that everything has to continue to run, but you're not at that point of sellers are clearly taking charge. That's why today on Twitter as well, I was like, sellers are just pathetic. You continue to not see follow through. You continue to see volume not step up. It's across the board, everything you don't want to see. So I want to make sure it's really clear as we're diving into this, okay? Now, again, I said today's video is going to be pretty short, so I'm going to go over some of the stocks I'm liking. But before we do that really quick, some of the big indicators here. The DXY, again, you saw what happened. So it's funny that we see some of the other areas of the market move in kind of the way we want them to if you're bullish or bearish, whatever it may be. So you look at DXY on like the 2-hour chart, 1 hour we're going to look at, and look at that drop you had. Now, typically when DXY drops, it signifies like a risk on area because people want to stay out of the dollar and they want to be invested in equities, right? Or maybe, even gold, oil, something along. You just don't want to be in the dollar if it's dropping and losing value. It makes sense, right? So when you look at what's happening with the dollar, it's very interesting that as we get this comments regarding rates shouldn't be raised again, we're feeling very comfortable with that. Is you start to see the dollar drop, but guess what? We don't see the Nasdaq get love, right? Very interesting behavior here, right? That we're seeing. As you zoom out, you can also see here too on the day. I'm just telling you, the dollar's clearly in a descending triangle, very clearly, one of the most clear charts you can see out there right now. VIX continues to trend also at 52-week lows. I mean, really, this is like 104-week lows. This is going all the way back to 2020 of where you're at now. Right? You haven't been this low in forever. Okay, we go down a little bit more. We saw some upside today on yields, but then we started to kind of see them pull back slowly. So we saw momentum kind of creep into yields, and then they really hit a brick wall. What I will say, though, is your 10-year is still outpacing your 30, which is a red flag. And I'll continue to say this forever. 10 and 30 is the biggest. 10 and 30 inversion is the biggest red flag on the market that there can be. I'll say it over and over. You got to watch that one. I know people like the smaller inversions. Again, this is what shows me like overall health flatline. And while this remains so close to fully inverted, you have to be cautious. So I've been watching this a lot lately. So this is like one areas I'm looking at. I'm like, it's definitely scary. Okay, I need to see the 2-year, 5-year, 10-year start to creep down. Need those to start dropping down, but they're not so far. Also, too, gold's been a very good indicator of money flowing back into the market. Right? You go back, into May, you peaked out here, 1, 2, 3, triple top, pushing back down. I'm just saying, even while the dollar is dropping, gold is dropping. Typically doesn't happen. I'm going to tell you that. Now, if we look a little bit deeper here, what's happening here, you're seeing gold dropping, Nasdaq also dropping. You're never going to really see your safe commodity gold, oil drop, dollar drop, and, Nasdaq, ES, Dow drop. Those typically don't happen in tandem. So again, leads me to this area believing a little bit of a pullback happening. That's what I'm seeing there. Now, top stocks I'm liking. I'm going to say really quick run through. UNH, I said it a few days ago. Absolutely love it. You clearly have a massive support here. Very, very easy to see. A lot of love. Love this back into the 500, give or take. XLV, it's ETF, the healthcare ETF. Absolute monster on the daily. Continues to hold, looks strong. I like it a lot. Nothing else to say. Love UNH. It's a longer term name as well. You're going to see a lot of common themes here with Dow names. I like Boeing. It needs this. It's kind of below the 200 SMA on the weekly. If it can get back above like 213, I like it a lot. Back to the upside. Again, dated. Caterpillar, again, you still look good here. Kind of getting a little. It's not really a flag. It's hard to say because you got that little bit of a gap. But I still like what's happening with your cat. You're back. You're still above 240, which was that bottom right there. You can even bring this out and extend it. You can see right about there, like 240 almost on the tick where that gap starts as well. That's the key level that you're holding above. You love to see it. As long as you're above 240, I think you're looking for a continued upside. Because again, the Dow is showing a lot of love here. The Dow is holding up great. Am I saying go all in? Not. I gotta like keep checking myself because I don't want people to think I'm just hammering all in on positions here. AMD, you did slip down today. Once you broke 117, you had to get out of it. You were holding here. You broke down below 117, 116.5. You pushed down into basically 109, 111 range. I want to see 109 get hit, fill that gap, and then I'm looking to get back in it. What I do like about AMD so far is that you're kind of finding support at that 111 level. But again, daily chart, it's gross. Not a fan. Got to be slow here, but I'm watching AMD because I think value is there. Google, you saw a slip down today as well. 120, you're still trying to hold it. I like Google dated. I'm going to tell you right now, of all the charts, though, it's one of the scariest. I'm going to tell you right now, you have a clear head and shoulders that's kind of formed out here. You're at the bottom of that range. It takes really big cojones to go long here. I'm going to tell you right now, but I like it. I think going into it with minimal, not fully levering in, not even half of your position. I like it here. You want to start seeing buyers step back in. But I can only say it so many times. You look at names like Microsoft, AMD, NVIDIA. Some of these names ran crazy. I do believe Google is behind Microsoft in the AI push and race as far as, how much consumers are focusing on it. But dude, it's Google. Like they have all the tools they need. Like Google is going to eventually figure it out. I think they're incredibly undervalued in comparison to some of these names. They're going to figure it out eventually. I absolutely love them. Home Depot, you're above the 200 SMA on the daily as well here. As you can see, you're mounted above it. I want to see a push into 312. Pretty low risk. Stops like below like 298 roughly. Again, Dow names. I absolutely love them. Netflix, Aaron talks of buying out Paramount. I just still love Netflix. We caught the move from like 405 into like 450. Dated, I love them. Again, the big caution here is possibly filling that gap down to like 409. But again, I'm going to tell you right now, I like what Netflix is doing. They have a lot of upside. Again, these are just names I'm keeping on the list, slowly trying to start positions in and just dump a little bit of money at a time. Just a little bit, slowly, milking it. That's what I'm looking at. If you have comments, comment down below. See you tomorrow. Have a good one, traders.